Based on popular demand, today's video will be on centralized exchanges. As you see, this is our first poll and we engage the community to pick the topics they want on the next videos. This is to bring more awareness to Bullrun, to our platform, but also to educate the community as a whole in regards to crypto. Thank you for all that participated. You see there were 43 votes on it. It was on 24 hours. So we'll be posting regularly. You in the crypto space and as a community of the Bullrun ecosystem can vote on the topics that you want to listen to or you're interested in. Now, centralized exchanges. What are they? Before we get into it, greetings everyone. My name is Steve. Welcome Bullrunners. Welcome to the Bullrunners community. Like I said in this video today, it's our first poll that we put out on Twitter. And we want to bring engagement into the community. We want to bring education to the masses. We are in the very early stages of crypto. It's very important for us to educate ourselves, to learn about certain topics, because the more educated we are as a crypto community, the better for us and the easier the crypto adoption will go. In today's video, like I said, the topic will be on centralized exchanges. First of all, let's establish what cryptocurrency exchanges are and then the difference between a centralized exchange and a decentralized exchange. Cryptocurrency exchanges are platforms that facilitate the trading of cryptocurrencies for other assets, including digital and fiat currencies. In order to start buying and selling cryptocurrencies and other digital assets, the most common way is to transact with crypto exchanges. Cryptocurrency exchanges are privately owned platforms that facilitate the trading of cryptocurrencies for other crypto assets, including digital and fiat currencies and NFTs. Now, what is a centralized exchange? Centralized cryptocurrency exchanges act as an intermediary between a buyer and a seller, and they make money through commissions and transaction fees. Popular centralized exchanges are like the largest one, Binance. Coinbase is the largest one in the US, Kraken, Crypto.com. The disadvantages of centralized exchanges is because they're responsible for holding the customer's assets. Another thing is the transaction fees. Unlike peer-to-peer transactions, centralized exchanges often charge high transaction fees for their services and convenience, which can be specifically high when trading in large amounts. And as mentioned, custody of digital assets is one of the other downfalls. Most centralized exchange will hold your digital assets as a custodian in their own digital wallet, rather than allow you to store your private keys on your own digital wallet. While more convenient when you want to trade, there are drawbacks, namely the risk of the centralized cryptocurrency exchange failing or fraud. Recent examples include the $50 billion algorithmic stablecoin Terra Luna, bankruptcy of the hedge funds Three Arrows Capital, lender Celsius Network, the broker Voyager, and such sudden collapse of FTX. For the contrast, what are decentralized exchanges? A decentralized exchange is another type of exchange that allows peer-to-peer transactions directly from your digital wallet without going through an intermediary. Examples are Uniswap, PancakeSwap. These decentralized exchanges rely on smart contracts, self-executing code on a blockchain. These smart contracts allow for more privacy and less slippage, meaning it's much cheaper than their centralized counterparties. On another hand, even though smart contracts are rule-based and lack of intermediary third party means that a user is left on their own, so decentralized exchanges are mainly for sophisticated investors. Now, you see that the difference is with decentralized exchanges, you are your own custodian. Users of decentralized exchanges do not need to transfer their assets to a third party. Due to their nature of allowing for the peer-to-peer exchange on cryptocurrencies, decentralized exchanges prevent market manipulation, protecting users from fake trading and wash trading. Another thing that goes for decentralized exchanges is less censorship. It does not require customers to fill out Know Your Customer (KYC) forms, offering privacy and anonymity to users. Since DEXs don't exercise censorship, more cryptocurrencies and digital assets are available than through a centralized exchange. As a matter of fact, many altcoins are only available on DEXs, decentralized exchanges. Now, what are the drawbacks of decentralized exchanges? At the beginning, the learning curve, the complexity. Users of decentralized exchanges must remember the keys and passwords to their crypto wallets. or their assets are lost forever and cannot be recovered. They require the users to learn and get familiar with the platform and the process, unlike centralized exchanges, which offer a more convenient and user-friendly process. Now, these are all part of the learning curve, because eventually, the way everything is going, it's going towards decentralized exchange, own your own assets, be your own custodian. That's where everything is shifting towards. Another drawback for decentralized exchanges are the lack of fiat payments. So-called on and off ramping still mainly happen on centralized exchanges. Due to that, of course, liquidity struggles right now, because mainly most activities are done on centralized exchanges. There's a lack of liquidity on DEXs, so-called decentralized exchanges. However, that's all still due to the adaptation that is taking time. But once it becomes mainstream, as I will illustrate in these articles, it will become more liquid. Like I said, major exchanges are Binance, Coinbase, Kraken, Gemini, Crypto.com, etc., etc. Now, let's get into some news articles. Now, US crypto exchanges could face possible class action lawsuits. Actually, Coinbase and Kraken already have been sued, amongst Binance as well, and many other lawsuits are coming. Mainly, it's because the SEC sees them as listing unregistered securities and therefore violating the federal law. We often hear all these issues that we have, and the one that is really in the mainstream is the XRP, the Ripple case. To determine if a crypto is really an unregistered security, the SEC imposes something known as the Howey test. This was named after the 1946 Supreme Court case that determines whether investment contract must be registered with the SEC. Now, one of the common things, especially for the centralized exchanges, are if you sell your own tokens to build your platform, that's another thing that falls under the Howey test, meaning that you fundraised, you did an ICO, initial coin offering, to build your platform. And this is something that we at Bullrun don't have to worry about, because we didn't do an ICO, there was no whitelists, there were no private sales, there was no fundraising. We used our own private and personal funds to build this platform, complete with the use case, complete with the staking platform. Everything was fully funded by the founders from day one, and we have not sold a single BRL token on our side to fund this project. This is the main thing that really gets most of these crypto projects, especially the centralized exchanges, fundraising rounds, ICOs, whitelists, etc., to gather funds from investors and in order to build out their platform. Where I'm heading with this is just to show that centralized exchanges will not be around for a long time, because first of all, they're being cracked down. Large institutions, established institutions such as DW Bank is offering Bitcoin trading to 1,200 affiliate banks on their new platform. So right now they're starting with Bitcoin, and then eventually they'll add more as they go. The crypto accounts are linked to Eurocash accounts, so transactions can take place without going through a separate payment account. Where this is heading is that regulated banks in the traditional finance with already established licenses are offering retailers access to Bitcoin, Ethereum, and other crypto assets. And we see this going as far as even the German stock exchange in Stuttgart is providing custody through licensed subsidiary. So this is what we discussed earlier. It's great for adaptation, for the mainstream to feel more comfortable. But for me personally, I always go for be your own custodian. So in this case, they're offering custody, meaning they're holding your tokens. So you don't have access to your own keys, to your own wallet. They'll be your custodians. But the point here is that it's going mainstream. For those who are still new, the learning curve is still high. Same thing goes for NASDAQ. NASDAQ is the largest stock exchange operator, and they announced back in September that they're looking into responding to the high demand from institutional crypto investors. Now this aims towards institutional investors directly. Now imagine, centralized exchanges depend on fees. Traditional finance companies such as NASDAQ are looking to fill the gap left by more crypto-centric firms that have shut their doors in recent months. with the FTX, Silvergate, and Signature Bank. And this aims towards institutional investors. This will bring more mainstream adaptation for institutional investors. Crypto is not going anywhere, it's here to stay. Many large companies are now getting involved into crypto, and all these things that are happening in the macro space, we see that crypto tailored banks are being systematically shut down. They are unregulated, unregistered, and you see how these traditional banks and traditional institutions such as the stock exchanges, such as Fidelity also, which is opening a commission-free crypto trading platform for its retail investors. Now, this article right here is going to really shift the momentum from the centralized banks and into the traditional, more established institutions. Fidelity right here is opening a commission-free crypto trading platform for its retail investors. As we know, Fidelity is one of the largest brokerages in the world, handling 9.9 trillion in assets. They will be allowing investors to buy and sell Bitcoin and ETH and use custodial and trading services provided by its subsidiary, Fidelity Digital Assets. Why is this damaging for all the centralized exchanges? This is because this news came at a time when investors are questioning the ability of Coinbase and other exchanges like it to generate revenue. Historically, they have leaned on trading fees for revenue, but fee-free trading in crypto has become increasingly inevitable. So they're undercutting centralized exchanges such as Coinbase, Binance, and all these other ones by offering their retailers, which they already have 9.9 trillion under assets, they're offering them to purchase Bitcoin and Ethereum commission-free. And as we know, the centralized exchanges, as we say, they heavily depend on commissions and transaction fees. And without the fees, transaction fees that they're charging, that are usually higher than their DeFi counterparties, they won't be able to survive. So all these established institutional companies are strategically planned to undermine centralized exchanges. And they're being targeted by the SEC, as the Security Exchange Commission believe that Coinbase, Robinhood, and other centralized exchange violated the law, and investors who lost money purchasing cryptocurrencies on their platforms may be entitled to recover those losses. Again, there have been a wave of lawsuits by the SEC towards all these centralized exchanges. And as we see, a large market is the US, and once that market is taken out, there won't be a way for them to generate transaction fees, and it will choke them out, and centralized exchanges will be extinct, especially as these well-established financial institutions such as the Nasdaq Stock Exchange, such as Fidelity Investments, such as Microsoft, and multiple German banks that are offering new platform to the retail investors. These will all choke out these centralized exchanges that are unregistered, that don't have any licenses to operate, and these established traditional banks are already getting all these licenses, offering crypto assets such as Bitcoin and Ethereum to their retail investors or to the institutional clients, and offering an easier way to on-ramp and off-ramp the digital assets. This doesn't look good for this future of the centralized exchanges. This is also the reason why we were very reluctant to be listed on centralized exchanges, due to all these aspects discussed in this video today, as they're being hit by lawsuits from the regulators such as the Security and Exchange Commission. Big exchanges such as Binance, Coinbase, Kraken, and all these other crypto-centric institutions like we discussed, such as FTX, Three Arrows Capital, Celsius, Silvergate, Silicon Valley Bank, these all put a bitter taste in investors' mouths, and the regulators now are really zooming in on them and closing them down. And since they heavily rely on the commissions and the transaction fees, they will not be able to survive, as the counterparties which are already established in the traditional finance are offering a commission-free custodial services and are heavily competing against the centralized exchanges. Plus, they're already established, they have their licenses, they are registered companies in the real world, and they're now offering on and off ramp opportunities to the retailers and the institutional clients, which will choke out the centralized exchanges and will make them extinct. This is the reason why we were always reluctant on being listed on exchanges, as we saw that there is more downside than an upside on being listed on exchanges. Because right now, once they become insolvent, they have custody over your funds, over your assets, and they'll be part of the legal battle. They'll be part of the liquidation process, and you'll be lucky to even get your assets back. All we always talk about is make sure that you're on a decentralized exchange where you have full control over your keys, your wallet, you are your own custodian, become your own bank. That is the reason why we always push towards decentralized exchanges. That's where the future is, and that's where we're heading. And that's why also Microsoft Edge has this non-custodial wallet, meaning that the users have complete control of their funds and that Microsoft cannot help users recover their wallet. So even Microsoft understands that the future goes towards be your own custodian and you have control of your own funds. They offering a non-custodial option to bring crypto mainstream, and DeFi, that's where everything is going. Decentralized finance, we have to learn and educate ourselves to be our own custodian. That's where everything is heading towards. This was the video to talk about centralized exchanges, their strengths, their challenges, where they're heading in the future, and why it's important to stay away from centralized exchanges and to go towards decentralized exchanges. Be your own bank, be your own custodian, have full control of your own keys and your wallets. That's the key right now. Centralized exchanges are being sued left and right. They will not be able to sustain themselves as they heavily rely on commissions and transaction fees when their counterparties are offering commission-free custodian services, and their counterparties in the traditional finance are established companies that are registered with the SEC, that have the licenses that needed to operate. This is not looking good for centralized exchanges whatsoever. The future is decentralized exchange, being your own bank, having full control over your keys, over your assets, and be your own custodian, be your own bank. This is the video for today, community. I hope this was informational to you, as you understand now what centralized exchanges are, what decentralized exchanges are, the pros and cons of both. You understand where the future of centralized exchanges are headed. I personally believe the centralized exchanges will not be relevant anymore anytime soon, especially with the largest ones being sued already, seeking refuge offshores. I believe that the way this will shift, established banks, established exchanges are offering crypto services on the on and off ramping, and making it easier for retailers and institutional investors to get into crypto. Cryptocurrencies and the digital ledger technology is here to stay. This is the future. This is where everything is heading. Educational is key. And the sooner we understand that we have to be our own custodian, have full control of our own keys and our own wallets, and be our own banks, that's where we're heading to right now. As we see how traditional banks have been failing us, especially using this fractional reserve structure that is obviously not sustainable, we have to look elsewhere, and we have to be smart and learn from this as we wait for better options of full reserve digital banks. I hope this was educational to you today. I wish you all a wonderful rest of your day, and as always, let's keep in touch.